He was watching the screen. A trade should have gone through. Instead, the price blinked and vanished. Once, then again, then again. It was as if someone else had pressed the button first, someone inside the machine. And that's when he found it. A line of code that shouldn't exist. It doesn't have a name. It doesn't show up in public documentation. And yet, it controls billions. It favors some, silently bleeds others. And one man found it by accident. At first, it looked like a glitch. His trades weren't just losing. They were being front-run, outmaneuvered, like someone was watching his every move in real time. Not possible, he thought. Not unless. He rewrote the code twice, triple-checked his algorithms. Still, the outcome was the same. His orders vanished milliseconds before execution. Prices moved seconds before the news broke. The deeper he looked, the clearer it became. He wasn't trading on a market. He was playing a rigged game. His name is Haim, a quant, a coder, someone who helped build this system until the system turned on him. He wasn't paranoid. He was right. Wall Street was using a secret type of order, one invisible to most traders, undetectable in charts, and reserved for a very specific class of high-frequency players. It was called a special order type, but it may as well have been a backdoor. And the moment he found it, everything changed. His company lost funding. His name disappeared from meetings. Firms that once begged for his expertise suddenly stopped responding. One called him a liability. Another warned him to move on. He didn't. Instead, he went to the SEC. He gave them the documents, the code, the pattern. The commission launched an investigation, and for a brief moment, it seemed like the truth might surface. It didn't. What followed was silence, months of it, until one day the SEC issued a fine to a stock exchange, a quiet legal slap on the wrist, $14 million. No headlines, no arrests, no public scandal. But to those who understood the code, the message was clear. He was right, and they knew it. Still, the real question remained. If that switch existed, how many more are out there? And more importantly, who controls them? Something didn't add up. His system was clean, his latency low. The models had been tested against years of market data, and yet his trades kept losing. Not by chance, by pattern. Orders were submitted at perfect timing, but milliseconds before execution, the price would shift, just enough to slip away. He watched it happen again and again. Bid placed, price flickers, trade missed. No delay on his side, no network issue, just something else. He started digging through logs. Milliseconds turned into data trails. He tracked the path of every trade, watching how they entered the exchange and how, just before execution, something subtle changed. Some orders were being reordered. Others were simply ignored. There were no errors, no red flags, just silence, as if the system had quietly decided his orders didn't matter. And he wasn't the only one. He began reaching out, quietly, to other traders, coders, people who had built systems like his. Some said they'd noticed strange behavior too. One called it ghost liquidity. Another called it the invisible wall. But no one had proof. The market, they said, was too fast, too fragmented, too complex to track. But Haim didn't let it go. He believed there was a pattern, not a bug, a feature. And if that was true, it meant something terrifying. The market wasn't neutral. It had preferences. Firms with access to certain types of orders that weren't even listed in public documentation, could step in front of other trades, legally. It was like showing up to a race and discovering someone else got to choose the starting gun. He started isolating those moments. He compiled timestamps, price movements, order books, and what he found was consistent, chilling, and undeniable. There were structures inside the market designed to redirect flow, not in real time, in pre-time. Certain players were reacting before the market even moved, which meant they weren't reacting, they were orchestrating. If you're watching this and feeling like the game might be tilted, you're not alone. That's exactly what he felt. And the more he pulled the thread, the more tangled it became. Because behind these invisible trades were names, big ones, firms with deep ties to exchanges, firms that helped write the rules. And now he was starting to realize they didn't just play the game, they helped program it. But even then, he had no idea just how deep it went. If you're still here, you're already thinking differently. And in a world where silence is profitable, truth spreads only when you share it. So if this story matters to you, let the system know. Leave a signal. Because what Haim found next would confirm everything, and almost cost him everything.
He wasn't supposed to be the victim. Not him. Haim Bodek had built systems that outperformed some of the best minds on Wall Street. He wasn't guessing, he was engineering. By the time he launched his own firm, Trading Machines, he was seen as a precision mind, fluent in code, strategy, and speed. He had the pedigree, the contacts, the algorithms, everything he needed to win. And for a while, it looked like he would. But then came the losses, subtle at first, then persistent, and finally impossible to ignore. The models were working perfectly. Execution times were flawless, but every time the strategy should have won, someone else beat him to the trade by fractions of a second. He stared at the screens day after day. What he was seeing didn't make sense. It wasn't slippage, it wasn't latency, it was something else, something designed. He started running simulations, identical trades at identical moments. Sometimes they executed, sometimes they disappeared. He ran comparison tests across exchanges. The anomalies didn't show up everywhere, just on a few. And those few had one thing in common. They were routing orders through Direct Edge. A relatively new player at the time, Direct Edge had grown fast, too fast. It had deals with major banks, hedge funds, and dark pools. But most importantly, it offered speed. Speed that, apparently, didn't apply to everyone equally. The deeper Haim went, the more he saw it. His orders were being deprioritized, not due to timing or price, but due to structure. Invisible rules that reshaped the outcome without changing the inputs. That's when doubt crept in, not about his code, but about the market itself. He started comparing documentation, public API specs, exchange protocols, order type manuals. Something was off. There were gaps, missing fields, hidden flags. And he began to realize some firms were using order types he'd never even heard of, not because he missed them, because they were never disclosed. He found fragments of them in obscure filings, mentions of hide not slide, add liquidity only, and other terms buried in technical jargon, but nowhere did it explain how they really worked or who could access them. And that's when a terrifying possibility emerged. What if these weren't oversights? What if they were intentional? A custom-coded edge, built into the market's plumbing, available only to those with the right connections. He started reconstructing the logic, line by line, reverse engineering the behavior of trades he never saw execute. And the more he mapped it out, the clearer the shape became. There was a second market inside the market, one only a few could see, and even fewer could use. He wasn't imagining things, he was seeing something most weren't supposed to see. And that made him dangerous. But there was one thing still missing: proof. And to get that, he would need to do something no one in his position dared to do: challenge the exchange itself. But what kind of system lets you build strategies, then punishes you for winning the wrong way? What kind of market hides its rules, then sells them to the highest bidder? And how many others knew, but stayed silent? The next step would change everything. Because when he finally pulled back the curtain, he found the code. It wasn't just theory anymore. He had found it. Not an article, not a headline, a live test. A forensic breakdown of how specific orders behaved down to the microsecond. And buried within those patterns, the truth. Certain trades were skipping the line. Not because they were faster, not because they paid more, because they were shaped differently. They carried invisible instructions, flags, conditions, parameters not available to the public. And somehow, they always ended up in the right place at the right time. He traced them back to a single exchange, Direct Edge, the same one he suspected from the beginning. But this wasn't about one firm cheating. It was about how the exchange itself handled order flow. He discovered an order type that didn't exist in any public documentation, a custom instruction that allowed certain trades to jump the queue, to see liquidity without showing themselves, to react without revealing intent. It was called hide, not slide, and it was a weapon. To most traders, if you placed a limit order that would lock the market, it would automatically slide to the next legal price. But this type, it hid instead, quietly waited until the price moved, and then struck. No exposure, no risk, all edge. And it wasn't available to everyone. Only a handful of high-frequency firms had access, and they were making millions daily. Bodek documented everything, trade by trade, order by order. He recreated the mechanics and matched them against the results. And when he showed it to a fellow quant, the man said just 4 words: "You weren't supposed to see this." That's when the retaliation began. Job offers vanished. Consulting requests dried up. One firm pulled out of a contract mid-negotiation with no explanation. He was marked, not for breaking a rule, but for knowing one he wasn't invited to. Still, he wasn't done. He packaged the data, wrote a report, and sent it to the Securities and Exchange Commission. He expected disbelief, pushback, maybe even mockery. Instead, silence. Weeks passed, then months. But behind closed doors, things were moving, slowly, quietly. A regulatory investigation had been launched. Eventually, a fine came down, $14 million against Direct Edge, by then part of BATS Global Markets. It was historic, the first time a U.S. exchange was penalized for favoring specific clients through secret order types. But there were no names, no public trials, no admissions of guilt. The fine said everything and nothing. The switch was real.
And now it was buried again under settlements and NDAs. If you've never heard this story before, you're not alone. Most haven't, and that's not by accident. But now that you know, what do you think? Had you ever heard about this before? Drop a comment. Let's see how far this silence really goes. Because in the final chapter, we're not just talking about a hidden code. We're talking about what happened to the man who tried to expose it.
The fine came and went. $14 million. A headline that barely made a ripple. No executives named, no press conference, just a quiet line in a quarterly report. And Haim Bodek? He was nowhere to be found. His name wasn't mentioned in the SEC's decision. No interviews, no press recognition, no protection. The industry had gone silent, but not inactive. It started subtly. Conference invites vanished. Old colleagues stopped replying. He'd apply for roles he was overqualified for and hear nothing back. Then came the whispers that he was unstable, that he had gone too far, that he couldn't be trusted around sensitive systems. He wasn't blacklisted officially, but in a world where relationships drive access, he no longer existed. Firms that once tried to poach him were now pretending they'd never heard of him. His company began losing clients. Strategic partners cut ties overnight. Some hinted they were under pressure. Others wouldn't even say why. His reputation, built over decades, was collapsing in real time. And the irony? He hadn't broken the rules. He had exposed them. But markets don't like exposure. They like silence. And he had spoken. Behind closed doors, Bodek started receiving messages, some supportive, most cautious. One senior executive told him plainly, "You're right, but they'll never let this become public." Another said, "You don't go after the plumbing," because that's what it was, after all, the plumbing of Wall Street, invisible, essential, designed for flow. And tampering with it, even to reveal a leak, meant you'd never work near it again. The worst part? Nothing changed. The fine set a precedent, but didn't dismantle the system. New order types appeared, new names, new loopholes. The edge wasn't removed, it just got smarter. And Haim? He kept documenting, kept speaking, wherever he could. But the spotlight never returned. To this day, most investors still believe in the myth of a level playing field. They don't question the structure. They blame themselves. Bad trade? Poor timing. Missed opportunity? Market moved too fast. Front run? Just unlucky. But luck has nothing to do with it. Because somewhere in the code, someone still holds the switch, and they know exactly when to flip it. You never saw it. Not in the charts, not in the headlines, not in the manuals, the reports, or the investor calls. But it was always there. A quiet piece of code, written by someone you'll never meet, approved by people who'll never speak, and executed faster than you can blink. It didn't need to cheat. It just needed to stay invisible. That's the real power. Not winning, but knowing you'll never be questioned. And for those who try, there's a protocol. Not one written in law, but followed by everyone who wants to stay in the room. Bodek found the switch. He traced the current, and he paid the price. But the most dangerous part of this story isn't what he exposed. It's what remains hidden. Because if there was one line of code that changed everything, who's writing the next one? If this story opened your eyes even a little, leave a like. If you want more stories the system doesn't want you to hear, subscribe. Because the truth is out there, but it won't come looking for you. You have to follow the code.